So what about jumbo loans? Are those being done? I mean, we're up to what, about 740 or so in certain areas for these government
Yeah.
guidelines. So then if we go beyond that, if somebody wants to get $1 million loan,
Yeah, you can go up to 729, 750
okay,
and get a Fannie Mae loan. Now that's
yeah,
supposedly they're going to lower that down in October. Hopefully they won't, but that's what's planned. So if you need more money than that, you've been out of luck pretty much. Now there are lenders that will lend, but again the guidelines are very strict. Some of them will want to have up to 12 months of your total debt obligations in liquid assets, in cash. So
wow.
the idea being that if you got into trouble, you'd draw on your cash reserve and you could cover yourself for 12 months, all your debt.
They didn't used to look at that at all.
No. And so that makes it tough.
Yeah.
And most people, and if you're working with small business people, they're saying, I don't want to have my cash tied up like that. I want my cash working for me. So
Right.
it makes it tough.
Wow.
So that part of the market, it's it's really tough to get a mortgage for people.
Wow. How about adjustable rate mortgages? So it used to be, well, just a few years ago, adjustable rates were all the rage.
They were all the rage, yeah.
And now it seems like people are favoring the fixed rate mortgages.
Yeah.
But are they still there? What's
most of the time, and most of the time people say, I want to get into a fixed rate, to 30-year or 15-year fixed. Although we see people now that are saying, and these are guys that maybe you'd say a little more sophisticated financially, and they're looking at it and say, you know what? Maybe I jumped too soon. Maybe I should have stayed in an adjustable. So we are seeing some people moving back to adjustable rates. For example, we've been able to recently we were able to get people into adjustable rate mortgages below 4%.
Yeah.
And
mine just adjusted not too long ago, and and I'm still under 4%.
and it went down, yeah.
And
yeah.
so it went up slightly from the year before, but still, it's very low.
Yeah.
And so it sort of worked out for me, thank God.
So yeah. So if you've got a large loan, for example, $800,000 loan, and we can put you in one of these adjustable rate mortgages below 4%, in 3 years or 5 years, you're going to pay that down significantly. So it's appealing to a lot of people.
Yeah. Okay. So what are the currently favored conditions for home loans? What are the ones where it's seems to be a little easier to put a deal together?
All right, there is no easy deal. That's number one. You can bring a golden borrower,
Okay.
a person you'd say, gee, I wish I was that guy, because he's perfect. And it's still difficult. They'll find reasons to really dig into the loan. But okay, here's what they really want. You want a 740 FICO or better. They want to have a loan to value 60% or less. So that removes a lot of the risk of any falling real estate.
Also eliminates a lot of borrowers.
Yeah, exactly. And then they'd like to have a debt to income ratio below 40%. So in other words, your income covers 40% of your income is covered by debt. So,
wow. Okay.
Yeah, so that would be the ideal borrower that a bank's looking for. But even then, they'll get into it and just overanalyze everything, and it still takes a long, long time.
Now, what about equity lines? There was a time when, for some of my senior clients in particular, I was suggesting that they have an equity line instead of trying to get one of these, reverse mortgages or something like that. It seems like that's not really an alternative for them anymore.
Not anymore. And we used to suggest that. Just say if you're a little bit older, instead of spending all that money for a reverse mortgage, which are very expensive to originate, just get an equity line. A lot of times you get them for free. Can't do that anymore. We're only working with 2 lenders now that are even doing equity lines, and the interest rates have gone up a lot on the equity lines, and they won't really loan above 80% of the value of the home, and so it's very difficult. And if you're retired, it's almost impossible because they want to have income documentation
they're looking for income
to support the full draw on the equity line. So it makes it tough. So For a retired person that's in a cash bind or needs to help with their cash flow, we have used the reverse mortgage, and right now there is only one, and that's the FHA. They call it the HECM, and that's still available. It's still pretty expensive up front, but it's the only option.
What sort of fees do you pay for getting one of these reverse mortgages?
It's really expensive. Now, if it can be deceiving because when banks quote them, they'll tell you, well, the lending fees are such and such, and it seems reasonable. But then you have servicing fees, insurance fees, all kinds of different fees on top of that. So if you're kind of a normal home around here, maybe $700,000-800,000 value, you're going to pay upwards to $20,000 up front for that loan with all the fees. So it is really expensive, but if that's your only option, sometimes that's what you have to live with.
Yeah. Okay, WIMAC has been a little different from the field in general in that it specializes in processing no points, no fees loans. You and I were talking a little bit before this. It looks like maybe things are going to sort of move in that direction anyway, but let's move on. But what does that mean, and why does WIMAC favor that type of a loan?
We like to do this, Mike, and it is a true no point, no fee, no cost loan, where in the past we've been able to pay all the fees associated with the loan, so the borrower doesn't incur any expenses.
So nothing out of pocket.
Nothing out of pocket, nothing added to the loan principal.
Right.
So that's very appealing to most people. And also, if you think rates are going to go down further, why pay points and fees if you think the rates are going to go down?
Yeah.
Fortunately, geez, they have. So we've been right. And if you do the math, you have to stay in a loan for quite a while to make that payout.
But if you do pay points and fees, then in order to, although you may have a little higher interest rate for the no points, no fee loan, it takes a while to catch up.
It takes a while to pay that back. Absolutely.
Yeah.
So we like doing those. We always say, hey, the borrowers can't get hurt. You haven't paid anything for it.
Okay. When can you refinance again after you set up a new mortgage?
So, okay, that's a darn good question. And lenders are becoming a little bit more restrictive. Wells Fargo, we used to be able to do it immediately.
Yeah, right.
Now they've kind of clamped down a little bit and said we have to wait 6 months.
6 months.
6 months now, unless they give us an exception. Sometimes they'll do that. Other lenders, we have to wait from 4 months to 6 months to do that. So that's something that comes into play too. So in a declining interest rate market, we have to watch that really close.
Okay. What are some issues to be concerned about when you remodel a home?
Having enough money to finish, that's number one. Most of the calls we get now about people that need remodeling, they've partially completed their remodel, run out of money, and now want to get it done. Almost impossible to do. Now, there are some private money lenders, hard money lenders, that will lend on the right property. They'll help you get through your remodel phase. But you got to have a lot of equity before they'll even think of doing that. So if you don't have a lot of equity in your home and you're halfway through your remodel, you could be in real trouble.
So I guess for the most part, if you can, you want to borrow the funds that you need before you even start your remodeling project.
Yep, do your homework, look at the costs and get them exact as you can, and then give yourself at least a 10% buffer there, because you don't want to be caught with a property that's not completed.
And the other consideration, I think, is that if you don't do the remodeling right, you may not be able to refinance that house later.
Yeah, that's absolutely right. Yes. Can't tell you how many times lenders have turned down loans because they haven't had the right permits done in the past. So we've even had to go back to the 1940s to find building permits on certain properties, which is just crazy. But that's what they're looking for now.
So you were mentioning that the federal government has talked about that they'd like to discontinue Fannie Mae and Freddie Mac. What do you think would happen if they did?
Right now, we'd be in a world of hurt.
Yeah.
I think there's always going to be demand for mortgages. Somebody would make loans, but they demand a real premium to do that. So you could get a loan, but you'd have to pay for it.
The prices really go up.
Yeah, private money right now, you can get loans, but you're paying from 10 to 12, 13% interest and 5 points up front. So somebody would step in, but it wouldn't be very appealing to most borrowers.
And it would be kind of horrific for the housing market,
Absolutely,
wouldn't it?
yeah.
I mean, it's already reeling,
It's-
and you
it's
did
going-
something,
yeah.
did something like that, and it would really go in the toilet.
Yep.
All right. Well, here's a good general question. What do you think the future holds for the home mortgage marketplace?
That is a great question. I got to tell you, there's as long as people want to buy homes, there's going to be demand for mortgages, unless prices drop so low that we can all pay cash for them. Which if that happens,
In this area, that would be
yeah.
quite a sight to
Yeah,
behold.
we got bigger problems. So I think there's always going to be a demand for mortgages, and I think as long as the government doesn't stifle creativity, we'll see people that will step into the market and will be offering loans. So I have to say that there's always going to be, we'll always have the ability to get somebody a loan. What that's going to be like is anybody's guess, but I think we'll always have that ability to do that. But this year's going to be tough. It's going to be, there's a lot more guidelines, government guidelines and restrictions coming into play April 1st. It'll further make it tougher for people to get a loan and even understand the loan they're getting.
I mean, there's a lot of mortgage brokers that have sort of been going away, I guess. Isn't that right? I mean,
Yeah.
we've got all these, I went through all this licensing rigmarole last year.
Yeah,
This,
and a lot of
National
people
Mortgage
didn't do that.
Licensing Service or whatever it is.
Yeah, everybody that originates loans has to be part of that now, and a lot of people didn't do that. They couldn't do it. So yeah, there's a lot fewer people originating loans now, and in come April 1st, there may be fewer just because of new restrictions the government's placing on compensation. So that all has to play out. We don't know how that's going to happen, but that could really impact the pricing on mortgages. So we shall see what happens.
Okay, we got a little less than a minute left. Do you have any final word of wisdom for our viewers today?
Yeah, I think the best thing I can say is if you want to improve your interest rate, start right now, because I don't think it's going to get any easier. And if the rate's there, you should lock the rate in and get the loan closed and enjoy the lower interest rate. Don't wait.
Oh, don't wait. Okay. Another thing, though, you could actually get some of this stuff in process, like in advance, if you're expecting. Isn't that right, or no?
For example, what?
Well, if somebody wanted to be in position for, if the rates come down, and let's say in the next month.
Sure. We'll get them started. Get all the financials together, everything they need. Get it submitted, and on a good day, we can lock them. Yeah,
That's
absolutely.
great.
We can certainly do that. Sure.
Okay. Tom, I want to thank you again for being my guest.
My pleasure.
And, this is a topic that a lot of us are concerned about. So, folks, if you have a higher mortgage right now, maybe you can visit with a mortgage broker or your banker and see if you can improve that. Anyway, we'll see you next time on Financial Insider Weekly.